All right, let's subside the music there quickly because I got a lot of quick things to talk about. Good afternoon. It's Fred Atwater here. It's Wednesday afternoon here in Las Vegas, and I wanted to update. I got three updates here: LUV, Southwest Airlines, Procter and Gamble, and Raytheon. A couple of the trades that we've been managing, and this is like extremely part-time to me, but they make really, really good money, and they do it in a very, very safe manner here. Let's get a quick book recommendation here. This is Trade Your Way to Financial Freedom. Van Tharp, excellent teacher in the markets, and what he teaches is a couple of things: the R value. What R means, your risk value. Basically 1 to 2% of your account at the maximum. You can risk less than that if you want to. I tend to risk quite a bit less. And then position sizing. And in the end, you make more than you lose. Excellent book. I've read many trading books, and this is one of the top ones. All right, let's get on with it. Right in front of you, here in the upper part of the chart, here you can see LUV. That's Southwest Airlines. I'm going to make that a bit smaller next time, so we don't have a big fat pen marking the thing up. There's a couple of trade points that we've had, but we've actually been in this particular trade since I want to say early May. It was right in this zone here when we bought the $45 calls, which are way down here. The $45 January 19 calls, and the stock, as you can see, has meandered up and gone down. And as that has done, we've moved up our front month short strike calls, and currently we're holding the 45 by 60 spread on that. And what I'm going to do here, I'll show you, is jump over and let's go to the Analyze tab here, and let's do LUV. That's RTN. We'll get to that in a minute. Love, I've already done all the math here on this for you. So let's go quickly here and show you what's going on. Let me move my mugshot out of the way. Put it over here for just a moment. Actually, down here might be all right. You can see here, this is the theta decay line that we've gone over before. This is the current trade price, and our current P&L on only 4 contracts. We're only running 4 contracts. Is $2,000, right at $2,000. It's like 1,980 or something like that. But what I want to show you, which is kind of cool here, I'll do it when I get to RTN, is the ROIs on these things are just tremendous. You get a really good return on investment for a safe deployment of capital. Let's move on here, and let's go to Procter and Gamble. I don't think I have made quite a tape on this here before. I gave a class a couple months ago. It was actually on 9 May. Gave an online class to some folks that were interested in how to do this, and this is what Procter and Gamble has done for us. This is a 10 contract spread. Actually, you know what? Let's go over to the chart on PG first. Show you what we did and what the stock has done. All right. So back on 9 May, which was right in this zone right here, good identifying point. We entered the stock. The stock has gone up, down, up, down, up, down, just like stocks are supposed to do. This is a very good candidate for this style of trading that we do. You can see, and what we did was sell the front month shorts for the last. We sold when I did it in May, I sold the June, and then when June came along, I sold the. Actually, I think I sold the May ones. I sold a little bit strike out of the money, and then I moved it up as the stock came up here. We moved it up to about the 87.5, and then the stock has kind of gone up and down, and then I sold again at the 87.5, and the stock in the last couple of days has gone up here back to $89. And what we've done is collect some really nice premiums on doing those moves, and driven down the cost basis on the strikes, the leap side of those calls that we've done. That's a lot of technical talk, but what does it really come down to? It comes down to P&L, right? So here's the Procter and Gamble P&L that we're making right here. Current trade price theta decay line for the short month fronts, and this is the delta cap line, where our earnings are right now. So you can see P&L on this one also is sitting at about right at about $2,000. This one has a little bit less pronounced ROI than the LUV trade did, but still, you know, that's 2 months, maybe 2.5 months, a couple $1,000. That's some easy bill paying money for you there, and earned very, very safely as well. We didn't outlay that much capital. I think it was about 12,000 or so in this case, and $2,000 in 2.5 months on 12,000. You go do the math. That's a very, very healthy and nice ROI. Here's the last one here. I really, really like this trade. This was a really, really good outlay. Really good trade so far. One of the top ones this year so far. Raytheon. All right, and Raytheon, if you'll recall, we entered back down here at around the $150 level, way back in this zone right here, and the stock has done nothing but go up in value, but at a nice, predictable, and steady, solid pace. And I've sold the at the money or the at the money plus one front month shorts. That sounds very complicated, but if you message me, or we can talk about it, have a class. Another friend of mine is very familiar with the strategy, and we can go over that with you. What this spread looks like is a January 130 right now by a front month August short 170. There's 4 contracts deep in this, not a huge trade at all, and I'm going to show you the ROI calculations in this. Look at this stock. It peaked out at 170.68, and that was yesterday. This candle here was today's. I would expect that we see, look at this, there's a beautiful W up here. There's a little bit of action here. I would expect that we see a little bit of retracement and then a continuation on the upward side. We'll just hold those short calls and see how this stock continues to do as it plays out. But this was a classic example of really what you do in the stock market, guys. This is buy here, and I could get out now and sell here. What is that? That's buy low, BL, buy low, and sell high. That's it. That's the concept of it, except I've really augmented the trade by using some option strategies that allow me to control my risk with very calculated, in a very calculated manner. I've got just about 2 minutes left here, so let's look over at the Analyze tab there. Here's Raytheon, and as I've been showing you here, this is the purple theta line. Okay, theta decay for the front month short. Here's the current trade price right here, and P&L. Look at this on 4 contracts, $3,500. Okay, it's plus or minus $10 or $20, something like that. It's close enough. All right, and this space up here is theta decay that's remaining on my August short. So what happens over the course of the month? Really just monitor this. This line, this dotted line right here, will move left and right as the underlier price, the underlier being Raytheon, moves up and down in stock market price. And this purple line tends to go up. I'm getting too much junk on the screen here. So it goes up as the month decays out those front month shorts. All right, so check this out. I have made, I wrote down the math here. This was a $10,900 cash outlay. All right, it was $10,980. Okay, and this trade has made $3,500 so far since it being put on about 2 months ago. All right, $3,500 divided by that, you can figure out a real quick ROI there. We're sitting at about 30, I think the number's like 32%, something like that. 3,500 divided by the capital outlay of $10,980. There you go, 31.8%. I don't know anybody else that can conquer that kind of thing. What I do is I just cut the losers loose, and then I let the winners run. Thank you, guys. Thank you very, very much. I want you to have a profitable life. Always manage to always risk mitigate. Keep these things sensible. Position size. Cut your losers. Let your profits win. All right, guys. Have a really great day. Thank you.